Okay, so let's talk a little bit about crude oil and what you can expect in the crude oil market this upcoming week right here. So you currently see a current setup that we have with crude oil. And I'm going to go here and share this screen right here. So this was the trade that I put out inside of my private community on Friday after we did the analysis. We were looking for a retracement off that 88 fib level. And again, this is why it's important to be in healthy communities that are going to help you along the way. So going back to the crude oil chart right now, you can definitely see here how we, let me go full screen, how we currently shorted crude oil at this 88 level. So again, looking at the price at the 88 level is where we entered, was 59.51, and we closed at 58.77. So again, we just don't like to leave oil trades open over the weekend. So a nice about 70 points on return from a Fibonacci level. So what I'm going to do on this video is I'm going to break down where we currently are at with crude oil. I'm also going to give you some key levels to focus on with crude oil. And so that if you are not yet a part of my healthy community to trade crude oil indices and everything else, you can at least have a better idea about the levels going into this week. And then we'll take a quick peek at some of the fundamental news that is coming out on crude oil. So if you're a crude oil trader, you definitely want to stay to the end of this video. By the way, if you don't know who I am, my name is Armando, aka the Professor. Been trading and investing for over 10 years now, and really the energy sector has been my bread and butter, but specifically crude oil. So I'm going to spend a little extra time to help you, whether you are brand new, whether you're an intermediate, and if you are an expert. We definitely want to hear from you as well in the comments. So before we go to the charts, I would love for you to do two things to help me out and keep me motivated. Number one is hit the like button on this video at any point when you feel you're getting value. And then number two is head down to the comments below and let me know where you are watching from. I personally respond back to every comment that I receive, whether it's good or bad, but I want to know where you are tuning in from because I want to see where the viewers are coming in and how I can help you reach your goals, because that's what we do inside of our private community. So let's go ahead and go right into the chart here. And let me kind of show you where we are at and what we are looking at for this upcoming week right here. Just before I do that, I want to touch on a quick headline here, which is basically we saw oil gains here at the end of the market week. And I think a lot of this tends to stem from, again, what is going to happen with some of the big players, Iran, Russia, and their supply risks, with the fact that they were receiving a lot of oil from Venezuela, and there's been a lot of blockage of that oil arriving into those countries. So again, that is one of the main factors that we are looking at. So even though technicals are usually, pretty close, there's a couple things that you don't want to do when it comes to trading crude oil. You definitely want to avoid the typical Wednesday at around 10:30 a.m. Eastern. That's when inventories comes out, because that can become a mess for you. So I don't gamble my money, so I don't trade news, because what you're going to see a lot of times is that news could show it's bullish and the markets drop, or vice versa. It's a bearish news and the markets go up. So I just don't trust the news when it comes to these different reports. I rather just not trade crude oil on Wednesdays, right? And that way we kind of understand what the dynamics and the technicals are heading into Thursday. And this is why we trade, indices and natural gas and the currencies inside of our VIP club. So we're not just reliant on one chart that may not be ready to trade. So a quick congratulations to our members who closed out a nice Friday with the drop there at the 88 fib level. So we are going to start fresh, and we are going to head over into the monthly chart for crude oil. And I'm going to go ahead and give you levels. And again, my goal for you in this video. Okay. And again, I'm going to challenge you. If you have any questions on anything that I say on this video, all you need to do is go down to the comments below, ask a question, and I'm going to answer you within 24 hours, if not much sooner. Okay. So let's head over into the chart here. And we definitely just want to pop in a couple of levels here that are just very important to where we are at right now with price action. Okay. Now, if you notice right here, okay, at this level of 54.74 or so, right, we did leave a double bottom at this level right in here. Now, a question that I receive all the time is, hey, Armando, my price is different than your chart. Well, that's going to happen because every broker may have a different price. Also, keep in mind that I am using the crude oil futures chart for the month of February 2026. So if you're not trading on that particular futures chart, your price action might be a little different. And of course, your price on your broker is probably going to be different. But the majority of the price action, especially in the higher time frames, should pretty much mirror what you're seeing here. Now, again, if you're trading March contract already, again, the price action should be fairly close. But of course, the price that you're going to see on the right-hand side, okay, is definitely going to be different because, again, brokers establish their own price when it comes to, relative to crude oil. It could be off a few cents. It's never going to really be off more than a whole dollar type of thing. Okay, so what we are looking here is that as of right now, as of today's date, okay, as of today's date, January 10th, we are showing signs that crude oil, okay, has the possibility of finishing the month of January. And again, we're only 1/3 into the month. Right now, it is showing signs of a bullish engulfing candle, meaning that it is breaking this structure point right here. So if we kind of zoom in here on the monthly, right now we are taking a very green approach, meaning crude oil looks like it will continue or have the possibility of continuing to the upside. If we look right here at what's happened over the last, 6, 7, 8 months, and for those of you that have kids, they're going to know what 6, 7 means. Okay, we're going to see that we have not been able to close below 54.74. So we've had a lot of wicks down in this area, but the important note here is that we have not yet had price close below that level. So that seems to be right now, even heading back into 2025, that's kind of been the floor for crude oil, right? Not being able to establish a candle closure below this level. We have not been able to have a candle to close below this level. So what that tells me is, hey, for right now, right, this area right here, and I know it's a pretty big area, but this area ultimately has been a major player for support levels of crude oil. Okay, so we definitely got to pay attention to that as we go through. Okay, and so we're going to look at a multi-time frame analysis, but you have to look at the bigger time frames to see where we are going. Kind of what happened here on these two candles. So this is where we're looking at, is there a possibility for crude oil to, in the short term, head back up towards the next level, which is 65 or 66? As of right now, we're leaning towards that direction. Okay, but again, the month is still early. So as we drop into now let me get rid of this right here. As we drop into the weekly, let me go over to the weekly time frame. Okay, let me get rid of this big old arrow. Okay, again, the weekly candle, okay, did close above this level right here. I'm going to make this in yellow. Okay, so what does that tell you when it comes to the technical side? Now, again, we can zoom out here, okay, and I want you to take a look at this chart from here all the way down here. Okay, so when you see that chart, Okay, I'm going to ask you a question now since I'm doing the analysis. By looking at that chart over my shoulder, is that a bullish structure to you or is that a bearish structure to you? So, what I want you to do is go down to the comments real quick and let me know on this timestamp area, is that structure bullish or bearish based on what you are seeing on this chart right here? Okay, and then I'm going to answer you back inside of the comments. So when we're looking at this chart and we begin to zoom in here, okay, and we're looking at the last week that we just finished, which was basically the first full week of trading in January 2026. Okay, there's a couple of things that we have to pay attention to, and that is this key level. So we previously had rejection here at this level, this $60 level. We have not yet closed a candle daily or weekly above this 60 candle, right? So what does this mean, Armando? What do you mean by we haven't had that yet? So if we expect price to maybe go back up higher and further to these levels, this is the first thing that needs to happen. We need to see a daily candle close above 60 if we're going to have the possibility of price going higher. See, price action doesn't lie. So until we don't get that candle to close above 60, we cannot expect price to go any higher than 60. Okay, that's just the way it works. Okay, so that's what we have to pay attention to. Okay, now you also have to take a look at this right here. I'm going to label this right here. And what I want you to do is I want you to go to your broker and I want you to see if you have an open gap right in here. So there is a small price difference between this closure on Monday, September 22nd, 2025, and Monday, September 29th, 2025. Now, what you have to see is this a contract change gap or is this a legitimate gap in the markets at 64.44 that has yet to be filled? Because we do look at market gaps and those are super, super important. So removing the whole gap scenario, we need a candle to close above 60.10 or so if we expect price to go higher. Okay, so that's on the daily time frame. And if they break 60.10, then the next key level is 61.27. So if you kind of zoom out here, you can see on the day time frame, these are going to be the major key levels that you should be focusing on. So what you want to definitely do is take advantage of those levels that you see below me, pause the video, and go ahead and mark up these levels on a daily time frame. Now, we've got some members who use the color blue, for example, for their daily. Their 8 hours could be a different color. So however you coordinate your colors, right? Or you can add a text field like that too. So if you've never done that, let me show you how you can do that. Okay, so you can go to one of these lines here on TradingView if you use TradingView as your charting platform. And if I double click on this white line, it opens up this box right here where you can change the color of the line. You can do all that kind of stuff here, right? But in this text feature, okay, what you can do is you can put daily level. So that could let you know as you're going through your chart that this is a daily level that you need to pay attention to. And then you can do the exact same thing for your 4-hour levels, for your 1-hour levels, your smaller time frames. It's a nice little feature to have as you are running through your charts, because at the end of the day, the priority should always be on the higher time frames. That support and resistance holds more weight than a 5-minute, a 10-minute, or 15-minute level. So those are super, super important to remember. So as we look at this level here, okay, again, we're not going to go further until we cross that particular level. Now let's drop down to our daily time frame, because this is where it gets very interesting, is right here. Okay, so this is why we took a quick short sell against this uptrend, okay, based on this daily level Fibonacci. So what you saw at the beginning of the video was me taking a swing from this high to this low and basically coming up with the Fib levels. We are very successful trading Fibonacci levels inside of the club. I've studied Fibonacci a lot. I see the way it moves with crude oil. We obviously know nothing is 100%, but when I live on Fibonacci on the higher time frames, I get tremendous value for entries. I know where my risks are, and we're very, very profitable because we're using Fibonacci at a very higher time frame. And again, we're just looking for 20 to 40 point moves in crude oil. Secure that, and if we get a runner, great. But that's going to build your accounts quicker, safer, and you're going to build trust and confidence by building your accounts in crude oil, especially with the volatility at 20 to 40 points at a time. Okay, because if you just zoom out here, you can see that in essence, we've kind of just been kind of ranging between these levels right here. And it looks like we might be going back up to this level right in here. So there's not a lot of room to play, but I mean, this is still a $7 difference on crude oil. So that's 700 points that you could be sitting on and just taking some of these levels. So this is why we took that short position that you saw at the beginning of the video. That was the fib level that I wanted to show you. Okay. So now we have to kind of wait, right? We've closed out our sell trades because it's Friday. We don't want to leave crude oil open over the weekend. Never good to do because any major headlines on the weekend could cause a major influx in price. And you also have these Sunday gaps, which we trade live at 6 p.m. Eastern Standard Times. And again, crude oil sometimes loves to gap huge on Sundays. So what we're waiting for now as we look at this daily level is dropping down a couple of time frames. And this is why when we do our levels at a higher time frame, it gives us perspective, right? That yellow box there gives us perspective. So what we're seeing here now, and let me zoom out because I love to zoom out, is this showing a break and then a retest of this level? Okay. In my opinion, it is, right? In my opinion, it is, if all we're basing it on is on the technicals. Now, that doesn't mean that it's going to bounce off that yellow box and head up. If we look over here, here's a little example of the kind of break and retest, right? When we came back down to this level right here, they came back down to this level and then they bounced within that level right here to get us our 20 to 40 points on crude oil. Okay, so that's one thing that we have to look at, not on Sunday, but once the market opens on Monday to see where price is at. And this is why I leave the Fibonacci levels on my chart, okay? Because if you look at the chart below, those Fibonacci levels act like support and resistance from the current trend that you have your fib levels on. So if you do your fib levels right, and you don't have to be perfect, you could be off, a few cents, you are going to have strong support and resistance levels to help you understand where you may get some of these market bounces, right? And let me just show you an example of that. And I wish I would not always hit the marker, but you can see here, right? These Fibonacci levels, they may not be perfect. The zones aren't perfect. Remember, zones are never a straight line, but you can see here that fib area wasn't acted as an area of support, right? You can also see it here as well. The same fib area acted like support. Okay, so you can begin to identify those levels there when it comes to Fibonacci on both sides, right? You can see here how Fibonacci acted as a level of resistance. So Fibonacci levels allow you to understand floors, understand ceilings, right? And then if you sprinkle in a new fib level, you can find areas, for example, of retracement. So if we just focus in on this current price action right here, and now we take another fib level from this low to where price has already retraced right here, and we make this yellow, you can begin to see here, okay, let me get rid of this big old arrow. You can begin to see here that price is heading down into the 61 to 88 area. And this is also a level because you can see the white line is a level. Let me zoom in. So ideally, with a break and retest now, we also see a liquidity candle right here where price is coming down to possibly fill a fair value gap in that area. Now we kind of become like prosecutors, right? We begin to say, okay, well, where do we have nice odds to take our next bounce for crude oil? And that's kind of how we kind of break it down level by level is we look at these levels here and we show you, okay, right? We're coming down into fair value. We're coming down into 61. We're also coming down into previous resistance turned previous support. That comes into the bubble area. We look for our next possible buy off of this level here going back up. Okay. So that's how we do a quick process. Now, when you're new, right? When I was new 10 years ago, that thing there was like, what is he talking about? How does he do that analysis so quickly? That just takes time and practice. Okay. I'm no different than you, right? So it's just time and practice and repetition over and over and over. And why we've had so many members, excel their gains and their charts because they've adapted Fibonacci to the higher time frames. And so your risk becomes much easier when you are looking at a fib level, because in essence, the 100 fib level kind of acts as your stop loss area. Okay, because if price closes below the 100, for example, here, okay, if we were going to take a buy off that position, if a price closes below that level, and we'll turn it red, okay, there's a potential that the market could reshift and go further down. So you want to cut your losses. But if we're entering near the 88, we can already do our risk analysis and take our next buy or sell, depending on which direction we are looking for. So in this particular scenario, when it comes to crude oil, right now, it seems like we are going to be looking for this retracement to then look for another buy area right around that 58 to 58.20 opportunity for crude oil to continue doing one more bounce or one more level up. Because what we see here, okay, if we hide the chart real quick, right, we saw here, and actually I'm going to start brand new. If we see here, we've got level. So we had consolidation between 56 and 58, right? You can see that consolidation happening here, right? Buy low, sell high type of thing, right? But now we just had this one candle right here break above and close above that structure. So that signals to me that the market possibly wants to go higher with another wave. So we're looking for Fibonacci levels somewhere down in here, as we just identified, to pick up our next buy off of that break of structure to the top side, okay? With minimal risk, because we already identified a few minutes ago that if we come below here, well, guess what? If we come below here, well, we're coming all the way back down to this level. So this is going to be a key area for crude oil heading into the beginning of the trading week coming up. Okay, so I hope this little video kind of turned tutorial, kind of turned educational, gave you a little bit of insight as to my mindset. And this is exactly how I approach crude oil and really everything else that I trade, but specifically crude oil, because it can move very fast and we want to get in, we want to get out. We're not in the business of swing trading crude oil. Okay, those days are over. We're in the business of grabbing 20 to 30 points, leaving a runner. And if that runner shoots 100, 200 points, awesome. But if we're up 20 or 30 points, we've got to take some profits off the table. We've got to protect the trade and profit. We never let a winner turn into a loser. And that's why we have so many folks, building their accounts little by little. Okay. So I hope you got some value on this video. If you're still interested in joining me 5 days a week on a live analysis, tutorials, free education, free courses inside of that private app website that I showed you, you can go above. I'm still honoring my 50% promo because I believe in what I do and I believe in the people that do it with me, which is the 300 plus members that we have, because they contribute so much value, not just to crude oil, but to natural gas. We have currency traders. That's all they trade. We have a stocks room. We have a physical and mental wellness area, because it takes a village to do this right for a long time. Doing this by yourself is hard. Okay. Trading is hard, but doing it by yourself is even harder. So come on in. If you're coming in for $14 or $16, I forgot what it was for the first month, you have absolutely nothing to lose and everything to gain. Okay. Thanks for watching. I hope you have a fantastic trading week. If I don't see you, I'll put a few videos out. If you're not yet subscribed, you definitely want to hit, which side is it on this side? Yeah. Hit that subscribe button and then turn on that notification bell. Because what I will be doing time permitting, because my full focus is on the VIP Trading Club, time permitting is putting out some shorter analysis through YouTube Shorts and then keeping these longer videos for maybe once or twice a week for the YouTube members and those that are choosing to be in the YouTube membership community as well. Okay. Have a fantastic week. Don't forget to be kind to someone this week. Hopefully it's a stranger, someone that you don't know. Say hello, introduce yourself, buy them a cup of coffee with no strings attached, because we need a lot more kindness in this world. Have a fantastic week. Stay safe, and may God bless you and your families in 2026.